Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is yet another year-end special interaction that we're going to be having with a top market master for all of our viewers on this New Year and year-end specials. Remember, the Indian equity markets so far in 2024 have had shown a lot of resilience for a major part. We've faced so much, navigated through a lot of challenges, be it higher inflation, weaker than expected earnings, general election outcomes, the FIR outflows and geopolitical uncertainty and much, much more. Despite that, we are actually sitting at a 9% uptick for the year so far as the benchmarks are concerned. Broader markets like mid caps and small caps have given about 24% return for this year so far as well. So what we're going to be doing is speaking to a market master to help you understand the key learnings from 2024 and what is it that you should be approaching the new year with as well. Let us welcome Mr. Gautam Shah, founder of Goldilocks Premium Research on this special edition. Warm welcome to you, Gautam, and thank you so much for taking the time out. Season's greetings to you. May the Christmas cheer spread far and wide across your personal and professional lives for you, for your team members and family members at large too. At this point in time, I just want to first begin by understanding from you, what is it that you have learned from 2024 as an investor, and what is it that you want a large part of our viewers to take as a lesson for 2025 too?
Thanks, Sakshi, for having me, and happy Christmas and New Year to your entire team as well. I think 2024 has been an eventful year for market participants because we've had so many headwinds, and you rightly alluded to the same in your introduction in terms of the geopolitical developments, the FI selling, inflation, and all of these factors have been at play. But one thing which I've really learned as an investor, and which I keep telling my clients as well, it's important to stay in the game. It's important to think more medium term and long term, because had you taken the stand that I want to just get out of the market because of these geopolitical developments and come back in once the market stabilizes, that never happened. Once you're out, and the markets are just too fast. They're discounting well into the future, and they are probably the smartest, the markets have been in the last 25 years. So given all of that, staying in the game, thinking more medium term, long term, I think is extremely important, and staying with good quality companies. I mean, whenever we've interacted in the last 3 years, I've always talked about Indian hotels being one of my top picks all along. And look at what this story and what this stock has done, despite all the volatility.
Sure.
So as an investor, I think the key point is to stay in the game. As a trader, I think risk management holds a very important role, because on the election day, remember the kind of decline that we saw and how the markets came back. If as a trader you did not have risk management this last 12 months, it would have been a very difficult market for a lot of people.
Absolutely. Point taken. Staying in the game is extremely important, all through, and not waiting to time the markets is something that one should definitely take in. I also wanted to just get a sense, just like how you're pointing out, first 6-7 months of the entire year, we've seen a lot of resilience being at play despite all those sharp corrections. But in the last 3 months is when a consolidation, a correction has really taken place as well. Some of the froth that was, or the excesses were also taken out. After this recent correction, say about a 6% odd in October, about a percent odd in November, then about another 1.5% so far in December. After this, do you still feel that parts of the markets are still overvalued? Will we continue to see some more excesses being taken out as we move into the new year?
Well, unfortunately, I don't have good things to say from a near-term perspective. In the last couple of years, every time the markets corrected, they came back. They came back with a vengeance, and they went on to make new lifetime highs. I mean, that's the perfect script that was playing out every single time in the last 2 years, whole of 23 and whole of 24. But in the last 6 weeks, for the first time in a long, long time, the markets attempted to recover, found resistance, and have again fallen off the cliff in the last 10 to 12 days. Clearly, the market is signaling to us that there is a problem, and there is indeed genuine headwinds which the market is not able to clear in a hurry. So I think from a near-term perspective, I remain concerned. I would not have liked the markets to behave the way they have in the last 10 days. And therefore, I'm maintaining a cautious stroke bearish stance for the near term. And I think there is a high probability of the Nifty actually retesting the recent low of 23,300, possibly even taking that. And if you ask me what's the worst case below that, maybe another 5 10% downside is possible. But that's more like a 2 month view because we need to handle the Trump factor in the month of January. We need to handle earnings, which I think is going to be extremely critical. And we also need to handle the point around FI selling and the budget expectation. So four major factors are going to be at play over the next 4 weeks. The charts are not in good shape, and I think the markets are going to weaken over the next 4 to 6 to 8 weeks. But if you're taking the view for whole of 2025, so if you're taking a 12 to 15 months view, I have no doubts that the bull market is still intact. And post this correction, which could be slightly deeper, I think you are going to find some amazing opportunities. And being in the right pockets for the 12 to 18 months, I think is something which investors should plan for.
Okay. But if I ask you to probably look at this longer term lens and, towards the end of 2025, like you said, first few months taken out, things should steady out. Will we retest the highs, all-time highs that we have made? Will we further have the momentum build up further? Do you have higher targets for the Nifty beyond the ones that we've already seen? Or do you believe we are somewhere likely to be around the same that we have probably seen?
See, the markets are very complex these days, even though we use a lot of studies to understand markets, and we've been fairly been able to catch market trends, whether it was the fall in October or the rebound from 23,300. But I just want to give two numbers today, since you've asked me the best case and the worst case.
Yes.
And if I could look at the next 12 to 15 months, I could be wrong, but that's our assessment, the way we do our research. I think on the downside, over the next 2 to 3 months, because I feel that there are some challenges, the worst case I would want to work with is about 21,800 to 22,000. So that's probably the kind of downside that you could see, which is about 8 to 9% from where we are. That's the worst case, the way I see it. Post that, if we were to get back in recovery mode and were to remain in an uptrend, the number that we have been putting out in our reports, which investors need to plan for the next 24 months, that's 28,400.
Okay.
So we are looking at a nice journey, from the lows of possibly the next 2 months to the highs of possibly the next 12 to 24 months. And I think as investors, you should use these next 2 months as an opportunity to top up for the longer term.
Wonderful. So we have both the worst case as well as the best case scenarios playing out over the long term and the medium term for the markets right there. Now, you did say that, for investors to particularly stay in the game, it is important to identify the right pockets and probably stay in there as well. What is it that you are betting big on for 2025? Any themes, sectors that you believe will be on top of your radar for the new year?
See, 2024 in some sense was a year of madness. It was a year of SME. It was a year of grade C and grade D turning into multi-baggers.
Yes.
It was definitely not sustainable. And I think the reality check came in the month of October and November. And you might have noticed it's only top quality that has rebounded in the last few weeks. Anything that was standard is not joining the party anymore. So I think in some sense, the point that I make in all my interviews, the men have been separated from the boys. So in that sense, 2025 is going to be a very different year wherein value will be rewarded and quality will be rewarded. Narrative, story, Excel sheets will not be rewarded. So the idea is to stay with the top three names in each of the sectors. And in terms of sector preferences, I do believe that the banks offer a lot of value. SBI, SDFC and ICICI have been on top of our list. We remain bullish there. Real estate is a space that we like. So again, the top three names, Overvalued, DLF, Loda developers, I think look excellent. IT has been a favorite. Again, large cap IT stick to the top 3 or 4 names. And metals, which I continue to believe could be the dark horse sector, again, stay with the top 3, 4 like a GSW Steel or a GSPL. So stick to quality, stick to stocks and companies with earnings, and stick to value. Don't be in those 50, 60, 70 PE stocks thinking about they will come back and the growth will be returned. I think the economic environment is slightly challenging, and therefore value stocks will do better in 2025.
Perfect. Now let me come to the mid and the small caps as well, which have outperformed the markets despite all the noise about excesses and froth. 24% of a rally on both mid cap and the small cap, despite the corrections that we saw in the last 2 months odd. Where do you see the mid and the small caps headed in 2025?
See, it's a very interesting scenario that's happening right now because FI selling is typically happening in the top 200 stocks, which is the Nifty 50 and the next 50. So that's where the selling is coming in, and that's probably the reason we don't expect any serious upside on the benchmark indices. On the other hand, mid caps and small caps are attracting a lot of domestic money. So a lot of the mutual funds in the market and the SIPs which are now taking place are happening in
Sure.
mid caps and small.
Sure.
And that's probably the reason quality mid caps are standing out. You know, just 7 days back, you had the small cap index hit a new lifetime high, but it
Yes.
was a very weak lifetime high. And I do believe that there is scope for some more correction in both the mid caps and small caps. So the key message is maybe a 60% weight in the large caps and a 40% weight in mid cap and small caps is how one should plan. And within the mid caps and small caps, please stay with the top 200. That's the key point. If you're going to stay with stocks which are based on hope and narrative and activity based on all kinds of things, it's not going to bother. Stay with companies which are industry leaders and challengers in the mid caps and small caps. I think 2025 will be a good year.
Okay. Are there any spaces that you have a strict avoid on right now where you feel extra risk in case investors should be aware of in 2025? Where do you feel probably underperformance will play out?
See, one thing I'm very clear, this is still not a growth market. So all those stocks which justified a very high P, we can keep talking about Asian Paints and DMart and the Pidilites and the Havels of the world. I don't think they're going to come back in a hurry. I think that underperformance is going to stay. My stance might change over a period of time, but as of now, I don't think they're coming back anytime soon. So please stay away from these stocks, which are extremely richly valued. And in the mid caps and small caps, I think play the India story. So if you have to play infrastructure, auto ancillary, the EV theme, the banking theme, these are pockets where I think there are better opportunities.
Yeah, so you did take the name of EVs, and I wanted to actually come to these new age themes that have developed, renewable energy, solar space, particularly EV space, the sunrise sectors, where investors are already looking at probably a next 5-year, 10-year kind of a build-up. Are you positive on some of the stocks from this space? How are you approaching this new age tech space and new sunrise sector space?
See, new age is the future. There is no doubt about it. I think when you go through social media, it's pretty clear that AI is changing the world. It's changing our
Yes.
lives on a daily basis. And
Yes.
the earlier you realize that AI is here to stay, the better. And companies which are definitely using AI in their framework are going to do far better going forward. Coming to new age, there are select companies, select stories that we like Zomato has been a favorite for us for the last couple of years because we believe that Zomato and the India consumption story
Right.
pretty much goes hand in hand. If you want to play gaming, a company like Nazara has been on top of the list. I think doing something very interesting. If you're playing disruption in the auto industry, I think Car Trade Tech is a company that we have liked in the recent past. I think it can do some wonderful things going forward. So I would want to be very selective because many of
Okay.
these new age companies are narratives. I want to see earnings. In fact, there is another company which does a lot of AI, Affle India. I think is something
Yeah.
that we have liked in the past. So we like them selectively, but you can't paint them with the same brush. So I think as investors, you need to be very careful as to what you do in new age.
Absolutely. Now, you did talk about Donald Trump as the first stepping stone that we need to look at after he assumes office on January 20th and the way he shapes up the policies right then. What is, in your larger sense, going to be the impact? We've seen him take office in the US in the past as well. Do you think it's going to be similar? Are those pockets, like IT, pharma, export-oriented spaces going to be more impacted with the probably volatile statements, uncertain statements that keep coming in? Are they going to be at the probably facing end of such things? How are you really going to be looking at that factor play out for the Indian investors?
See, I think it's going to be a very important factor. I'm not a political analyst, so I
Sure.
wouldn't have a deeper comment here. But I think everybody is starting to feel that with Mr. Trump coming in, it's going to be a wonderful world. I don't think it's going to be as easy as it sounds because given his personality and given the kind of complex geopolitical environment that we have, I think there are going to be challenges from time to time. And given all that we've heard in the last 1 month on the tariffs
Yes.
and all of that, I think that is definitely going to impact India and Indian markets to a certain extent. So I don't think that the world is going to be as rosy as everybody is making out to be. One needs to be careful. And again, stick to companies with great earnings. Stick to companies which will survive or which will do well, irrespective of the policies of Mr. Trump. I think that's one key message which I would really want to give out to your viewers. But I'm a little concerned because I think the US markets have weakened quite a bit in the last 3 weeks. There is a
Yes.
scope deeper 6 to 7% correction for most of the US market indices. If that were to happen, India will be impacted because India has been an underperformer in the last 3 months. And given our GDP numbers and given how earnings are likely to play out, I think there are going to be challenges for 3 months at least.
Right. And the question that follows is, as far as the flows are concerned, you also alluded to it in one of your earlier answers as well. How are things going to shape up? We've also seen, like, an exodus of sorts this year from the FII's front. So, going forward into 2025, are things going to turn different? Is it still going to be China coming back in growth, probably taking preference? How is it that you are looking at the fund flows going forward?
See, I think a lot of people in the market keep making this point that FIs have to come back, must come back, will come back. I don't think that's the correct way to look at things because they have an option in this on this planet to
Yeah.
invest in any market in this world, and there are a lot of markets which at much more reasonable valuations. For one, I think China and Hong Kong can easily come back very strongly. I think chartically they are well placed. Fundamentally, they might be well placed. And I think we have multiple years of underperformance. So I think it's going to be very difficult for FIs to come back seriously into India unless the earnings trajectory of the next 2 quarters tell us that things are actually picking up on the ground. So I think this entire market is holding on based on domestic money, which I think is a mega trend and it is here to stay. And that's why I feel that the 2025 is going to be a battle between domestic money and FI selling and economic headwinds. And we'll have to see how the battle pans out. But be stock specific, don't look at the index, it's going to confuse you even more.
Right. Another important point that you marked out was that it's going to be seen how earnings are going to play out. Of course, there is a lot of fear that probably disappointment on the earnings front could continue in Q3 onwards as well. But what is your overall sense in terms of where can we see outperformance and where do we see continued underperformance on the earnings front?
The markets are the best judge of what's happening behind the scenes on the earnings side, and the way FMCG stocks have corrected and the way
Yes.
consumption stocks have corrected in the last couple of months. I mean, an FMCG index lost 20% in a matter of 3.5 months. That's not happened
Yes.
in a long time. So clearly there is a problem somewhere, and I think we need to accept it. And you can't keep talking bullish about Indian markets, keeping domestic money in mind, because when the correction happens, domestic money also takes a bit of a backseat. So I think earnings is definitely an issue. And the last GDP number that came out was a shocker. I speak to a lot of corporates,
Yes.
a lot of CEOs, and they have been saying that on the ground there are issues, and it will be a challenging task for earnings to return immediately. So I think we just have to wait and watch. And I think government's policies in the next 2 quarters, and particularly the budget, will play a very important role to all that happen. So again, I'm a
Absolutely.
little concerned, to be honest, and that's probably the reason I'm being very concentrated. I'm very happy with an SBI at a 9-10 PE, but I would be very unhappy with a lot of other stocks which are at a 50-60 PE because I know that the margin of safety is there. So please pick stocks which give you margin of safety this year.
You were talking about SBI, but a lot of these banking names, there is an IndusInd Bank with a 40% decline. Bandhan Bank has lost 32%. I mean, like, even if you talk about, say, AU, Small Finance Bank, or an IDFC, there's almost about 35-40% kind of a decline. The big question is, are these going to come back, or should one just absolutely, like you said, stick with an HDFC, ICICI, or an SBI?
Don't touch underperformers. I think that's the key message because I think a lot of people have been trying to time these underperformers, but they just don't come back. I mean, Asian Paints is a great example. You can keep
Yeah.
talking fundamentals, but Asian Paints is actually now close to the COVID highs, COVID high period of 2020. So it tells you it's 4 years of underperformance. But
Correct.
coming back to the banks, if somebody was in the top three, you would say that, oh, my portfolio is doing really fine. I'm doing quite okay. I'm participating. But
Sure.
if you are in the Indians and the Kotaks and the IDFCs and the RBLs of the world, you'll feel that this is such a bad market to be in. So again, the key
Absolutely.
point is stick to top quality, stick to SBI, SBFC, and ICICI. You will be safe. In difficult times, it will keep your portfolio protected. In good times, it will create alpha for you. So do not
Absolutely.
go lower leg. I think stay with the top quality.
Okay. Last word from you then on the show, sir. Top 5 bets for 2025 in terms of stocks.
Well, I think if I have to So let me start by not giving you a stock. I think gold and silver is probably one of my top bets for 2025.
Okay, wonderful.
I think I remain quite bullish. I have been so for the last 2.5 years from lower levels. I do believe that they will deliver better returns than equity markets this year, 2025. So we are looking at a nice 20-25% upside for both gold and silver from these prices. Among the other sectors, I would stick to banking. I think IT will outperform, metals will outperform, and probably real estate will do exceedingly well. So these four would be my baskets for outperformance in 2025.
All right. Well, thank you so much, Gautam, for being with us on this very special edition. Here's wishing you again a fantastic upcoming new year for you and for your team members and family at large as well. And may you continue to come in more often to share such pearls of wisdom with all our viewers into the new year as well. Thank you so much for being with us.
Thank you, Sakshi.
All right, viewers, we will continue to get you such fantastic conversations that actually give you a wider perspective as to how do you really need to approach the 2025 new year with a lot of moving parts here and there. How do you devise your investment strategy? What is it that you should avoid, and where exactly will money be made? If these are the questions that are on your mind, you're hearing it from the top voices in the markets right here on Business Today Television all through this entire week and the first week of the new year as well. We will get you the best of market voices all through technicals, derivatives, even the fundamentals and currencies are also on the precious metals commodities front as well. So don't miss all of these conversations. This is going to really help you build a strong portfolio for the new year. Stay tuned with us. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is another fantastic edition on Market Guru, where we will have another market guru to explain to you what should be your top investment strategies for the upcoming year 2025. So if that's on your mind, this is the conversation that you really